All right, this is today's teaching topic, stops, where to put them and when and how to move them. So our placement of stops is based on primarily one of our first topics that we covered in teaching time, which is Dow theory. And I'm showing a chart of Apple here, daily chart. And just to recap, the trend portion of Dow theory, here's this up move on Apple. And it is a series of higher highs, higher lows, pretty orderly, right? Let's gap up till that trend ended. But you can see that's how price moved in that uptrend. So if we were to have taken this up move, taken a long trade, right? We would look at this and we would go, there's a high, higher low. And, you could have taken this trade when because this was a downtrend. And then it was pretty clear that the trend changed with a high, higher, low, new high. The oscillator going green, price got above the 50. So you could have taken, could have been talked into, taken a long trade here. So where do you put your stop? You put your stop under the prior low, right here. Why do we put the stop there? Because by definition, the trend, right, high, higher, low, high, and then pretty soon higher, low, right? If it goes down below this level, then the criteria for the uptrend is ended, right? It's no longer an uptrend. The uptrend failed. So we want to stay in it as long as the uptrend is valid. So we put our stop there. And what I do is I actually go get the exact value of that candle. Grab my little data window here, right? And here's that candle. And the low is 133.77. So I'm going to put a stop at 133.76, one tick below that candle. And then, you've seen I use red for my stop. There's my stop, one tick below that candle. Now, as price continues, so that's where we put our stop, right? As price continues, get rid of this, go away, right? Price continues in this uptrend, high, higher, low, new high. We took the entry, high, higher, low, new high. At that point, we'll go ahead and move the stop. I avoid the word trail the stop because trailing stop is an exit order type, and some people would confuse that. So I don't use percent or price based trailing stops in the order entry portion of the platform. I trail my stops according to these moves. And so there we would trail the stop, move the stop, and we just keep doing that throughout the life of the trade. Until ultimately, at some point, your last stop gets hit and you close the trade. Now we do take profit and scale out, and that is the topic of the next session, which we'll have on Monday, is how and when to take partial profit, how to scale out. But you can see here's the downtrend, right? Low, lower high, new low. So if we had taken that downtrend, we would put our stop here, low, lower high, stop here, entry here. And then as it progresses, move the stop to here, move the stop to here, move the stop to here, right? And so on. So that's, the basis of where we put stops and how we adjust them through the life of the trade. So let's look at an open trade right now. Let's look at Robinhood. And, the annotation on my charts, I try to be consistent. I always put, this blue line where we enter, the red line for our stop, and the green line for the target. And that's the intermediate conservative target at these prior highs. You can see I've drawn in another line. That's a potential target. If this thing breaks out of this channel, it could go screaming up there, and that would be awesome, right? Now you can see my stop on this one there is a low, but I'm not even on the wick of this bar. So this was kind of a straight move up, and I didn't want my stop clear down here at the bottom, because there was some price action in here, and occasionally, particularly when there's been a big linear move like this, I will shift time frames to find a place for the stop, and that's legitimate. So I shifted this one to a 60-minute chart, and you can see I've put my stop. Here was a high, higher, low, high, higher, low. Right, so I put my stop here, and we could legitimately be trailing it up here because this thing's doing well. But occasionally I'll shift to a lower time frame, one time frame lower, to go find a good place for a stop. If there's been this big linear run, and it's to find a place for a good stop, and you don't want to clear down at the bottom. So that's a bit of an advanced technique, and we do that sometimes. So that is today's topic on where to put a stop, how to move it. Kind of a short topic, but it's an important one. And then again, on Monday, we'll cover scaling out, taking partial profit. And then on Tuesday, we'll cover scaling in. And we have a trade here. If this breaks out right up here, we might scale in, add to the trade. Kind of an advanced technique, but it can increase profits without increasing risk. So you got that to look forward to. And with that, I'll go ahead and stop the recording.